tax-free tips could be a game changer for how you handle your staff compensation and your tax reporting. The No Tax on Tips Act, H.R. 482, aims to completely eliminate federal income tax on tips for service workers. Now, this is still just a bill. It hasn't passed yet, but President Trump had this as a campaign platform item, so we'll probably see some version of it pass this year. For businesses that currently accept tips, you should prepare now since the bill could be retroactive. Immediately, I would suggest you update your current payroll tracking to separate out tip income earnings if you haven't already. This means working with a great payroll software to create new reporting categories that distinguish between the base wages and tip earnings. Now, side note here, choose a platform that can automatically separate these out and tax it appropriately. We recommend Gusto or OnPay for great solutions for small businesses. Now, let's take a little side road here. Will this make employees more honest? Employees typically report low amounts of cash tips, much lower than the percentage of tips they receive on credit cards. If employees don't need to pay tax on these tips, that may result in them showing higher cash tips and thus higher wages. They could actually try to over-report their cash tips to get their wages higher if they're trying to qualify for financing a mortgage or buying a house or a car. From a psychological perspective, if employees reported their actual amount of tips they received, their pay stub could look a lot better, and it might actually help retain employees. We'll have to wait and see on that one. Now, another important idea here, keep in mind that no one has said anything about the business's contributions to payroll taxes on tips here. Businesses still have to pay matching payroll tax contributions on tips. So if employees are more honest and report higher cash tips, they don't pay any more taxes. But you as the business owner pay higher matching payroll taxes. So we'll keep a close eye on this one too and see how it shakes out. So when we think about tips, we think about restaurants, hair salons, etc. But what about accountants and lawyers and financial advisors? Yeah, I've already thought about it and had questions from business owners who don't traditionally get tips. What if I changed my business model to include tips? There's still no hard answer to this yet, because it's still a proposed law, but the answer right now is leaning towards probably that won't work. The definition of qualified tips in the bill is any cash tip received by an individual during the course of employment, an occupation that, by tradition, has received tips on or before December 31st, 2023. The precise list of eligible occupations is set to be published by the Treasury Department within 90 days after the bill's enactment. Now, they also talk about the exclusion of who can't use this. The bill excludes from the definition any tip received by an individual who, in the preceding taxable year, earned compensation from the same employer that exceeded $160,000 or some threshold they'll indicate. In other words, highly compensated employees cannot claim the tip deduction. Boo-hoo. For now, we'll just be thinking about traditional jobs where employees get tips. But once this final legislation is in place, you know I'll be diving into how this can help any business that might be able to fall within the guidelines they issue. So keep a close eye on this one, folks. We'll keep you informed when there is any update to be had.